It's Fed week, but with inflation, the hot topic, will the Fed take urgent measures? Good morning, everyone. It's already a really exciting day in the bond market. Things are crazy. 10-year Treasury hitting right on our target of 3.25%. Unfortunately, we saw there was a clear path there, and mortgage-backed securities, get this, hold on now, it's not good news. We're down 73 basis points, but believe it or not, that's about 20 basis points better than where we were just a little while ago. So volatility, worsening in pricing, this is all a result of inflationary fears. And because of that, this week's Fed meeting is going to be really important, because will the Fed, who was planned on taking a 50 basis point hike at this meeting, that was what everyone was expecting, now is 75 basis points, is a 100 basis point hike in the cards? There's some analysts out there that are calling for the Fed to surprise the markets and increase rates by 75. Some people even saying 100 basis points. As we get a little closer, we'll talk more about this, but the Fed does have to do something. They are so far behind the curve. Inflation is running hot, and this is creating a lot of problems and a lot of unhappiness here. Now, the stock market, thinking that this is more of a possibility, down again, big time. And now actually with today's activity, the S&P 500 that represents 83% of the value of the stock market will be in bear market territory, meaning down 20% from the highs, and probably will also be down about 20% in 2022 alone. This is something that we're all going to be keeping a close watch on. We're hoping that this level of support actually holds and that the bond market responds well if the Fed starts to show that seriousness in fighting inflation.
And the savings rate, we just got the updated numbers. It has now fallen back to pre-pandemic levels. During the pandemic, it was up 34% or so. Now it's at 4.4%. And this is a low going back to September of 2008. So just another sign of things getting worse and slowing in the economy and a potential recession indicator. And boy, Barry, as you mentioned, there really is carnage everywhere. It seems like there's some panic that's starting to set in, especially with that really hot CPI number and uncertainty about the Fed. But the one bright spot has been the housing market, and 38% of homes out there are owned free and clear. But we know refinances have been significantly lower. If you look at the latest mortgage app data, down about 75% year over year. Part of the reason for that is clearly because half of people out there have a mortgage rate beneath 4%.
But people still want to buy homes. According to a survey by Bankrate, 74% of millennials and Gen Z still view home ownership as one of the top hallmarks to achieving the American dream. That came ahead of things like retirement. Now, 2/3 of individuals surveyed said that what's keeping them from purchasing a home is affordability issues. So make sure that you're using our buy versus rent comparison tool in MBS Highway. And also make sure that you join today's webinar with the CEO of List Reports. This is going to help you build referral relationships and strengthen your purchase activity. And that is happening today at 11:30 Eastern, and you can register just by clicking the link below.
Yeah, and as Barry mentioned, it's a very exciting time right now. On Wednesday, we'll be hearing from the Fed's meeting, whether they'll hike by 50, 75, or even 100 basis points. And then we'll be interested to hear after in their press conference, their comments on the meeting. And on Thursday, remember that we're getting starts for the month of May. And we're really going to be interested to see the number of completions here rather than just the overall number, because we want to see what supply is coming to the market, even with all these supply chain disruptions that we're seeing. And Barry, before we get to the charts, we made a big switch here to the 5% coupon.
Yes, we did. We're looking at the 5% as our featured coupon based upon the deterioration we've seen in price. So I remember there was a good time for us. They were going down, down, down in coupons. Now it just seems like we're going the opposite direction. In fact, let's look at the charts here. And there's a few things to note. You see here, we hit this low level, and we've actually improved a little bit here since then by about 20 basis points. But right now we are still down 73 basis points. Big down moves. Hey, look, we had a locking bias quite a bit here. We've done a few locks here from the top, all the way on the way down. We've been locking, obviously, but many of them proved to be very well done. Friday morning's locking bias, as well as the intraday lock early in the morning at 10:46 a.m. Ahead of all of this deterioration. Hopefully your pipelines are at least in good shape and your clients are pleased with that. I remember talking to you guys and saying back a long time ago when we started looking at rates get above 4%, and people were worried about it. We said, listen, this is a time where we're going to look back on this and say, wow, this was a really good rate to have instead of being uncomfortable with it. Unfortunately, that has come to be. And we take a look at the 10-year, we're actually above the 3.25 level. We're going to be fighting this today. Let's hope that we can get back underneath it and this acts as a ceiling, because team, there's 350 would be the next kind of stop there. So let's hope that we at least take a pause. In some strange way, if the Fed does increase its move above 50 basis points, which is planned, to maybe 75 or 100, you may see a rally in the bond market if the Fed shows that it really is trying to fight inflation more rapidly. With that, and the damage kind of done here and waiting to see if the ceiling holds after being protected and locked on Friday, today we'll start the week by floating to see if things stabilize, especially around this 3.25 on the 10-year. Hope you guys have a great one.